Welcome back, everybody, for another deep dive. Today, we're going to be looking at something pretty troubling. It's a story out of Hengelo in the Netherlands, and it really highlights, I think, how devastating scams can be. Imagine just trusting someone with your savings, thinking you're going to get a good return on that, only to have it all disappear. That's exactly what happened to over 300 people in this case, all caught up in a crypto scheme that just went bust. We're going to be basing this deep dive on an article from bitcoinmagazine.nl. It's a Dutch news site, so for those of you who speak Dutch, you can check it out yourself. But what I think makes this case so interesting is we're not talking about some faceless corporation or, a big institution. We're talking about a 24-year-old local trader who is painted as like a crypto genius,
Yeah.
promising these incredible returns and even getting regional football players caught up in the mess. So yeah, it's a wild story, and I'm really curious to kind of unpack it. So let's see what went wrong.
Yeah, I think this case is a good example of the real dark side of investing, especially in the crypto world, which can be pretty volatile.
Mm.
On the surface, it's easy to focus on the financial losses, which we're going to talk about, and they are substantial. But I think we also have to remember that beyond the numbers, there's a deeply personal story here. A story of broken trust, the devastating impact it has on people's lives.
Right. And the Hengelo case, I think, is a prime example of that. Like we said, it wasn't some, big corporation. This was a 24-year-old local trader, someone who built a reputation in the community and really was able to gain the trust of, over 300 people. A lot of those are friends, family, people he knew personally. The article mentioned that the minimum investment was 5,000 euro dollars, that's a pretty hefty sum. So you can imagine the level of trust that he must have cultivated in order to get people to hand over that kind of money.
Yeah, that's a classic example of what we call affinity fraud. It's essentially when scammers target groups. They're already connected to, whether it's through family, friendship, shared interests. And because of that pre-existing trust, it makes it much easier for them to kind of overlook any red flags, convince themselves that the investment is legitimate.
Especially when it seems like everyone around them is on board.
Right. It's like it creates a we're all in this together mentality.
Exactly.
Yeah. So it probably amplifies that sense of trust and maybe masks any doubts that people might have individually. So can you walk us through how this scheme actually worked? How did this trader convince so many people to give him their hard-earned cash? What were the promises? What was his pitch? So from what we know, he was promoting investments in, two of the most well-known cryptocurrencies, Bitcoin and Ethereum. I don't know if we need to give a whole explainer, but
Yeah.
essentially, Bitcoin is a digital currency that operates without a central bank or administrator. And Ethereum is this platform that allows developers to build and deploy decentralized applications. But he was leveraging that buzz around crypto, right? The potential for high returns. That's what drew so many people into this market in recent years. He was selling a dream
Yeah.
of, becoming wealthy through crypto, especially as someone who was already perceived as a successful trader.
And it worked, right? At least for a time. It sounds like people really did believe that he had some secret formula for success in the crypto market. But then everything changed. The article says that in January of this year, he just sent out an email saying that all the money was gone. Poof, vanished. An estimated 1.5 to 4.5 million euros just disappeared. So I'm curious, were there any warning signs before this bombshell email?
Well, that's what investigators are trying to figure out right now. Was this always a scam, or did things just go wrong?
Yeah.
The crypto market did experience a pretty significant crash in 2022. So that's definitely a factor.
Yeah.
But what's concerning is that, according to the article, he continued to accept investments even when things were clearly going south,
Oh, wow.
which is a big red flag.
Yeah. So that begs the question, was he genuinely trying to recover the losses, or was he intentionally stringing people along, taking their money, even though he knew it was all falling apart? It's hard to say. It adds another layer to this story for sure. It's a classic too good to be true situation. But I'm curious, before we talk about what happened after, the email and the victim's fight for justice, why do you think Hengelo was particularly vulnerable to a scam like this?
Yeah.
Were there any social or economic factors that were at play?
That's a really interesting question. Hengelo, like many towns all over the world, has had its share of economic ups and downs. I think there might have been some financial insecurity among certain residents, which might have made them more susceptible to the allure of quick riches. And then there's also the factor of community trust. In smaller communities, people tend to know each other, which can be a strength. But as we see in this case, it can also be exploited. So that's where I think understanding the dynamics of affinity fraud is really, really crucial,
Yeah,
especially in these types of situations.
totally.
With affinity fraud, these scammers, they try to They become part of the community.
Right.
They blend in and appear as one of us. And that really disarms potential victims.
Yeah.
And sometimes even use their own, perceived success to draw others in. So it becomes this kind of aspirational pull, like, if they can do it, I can do it too.
Right.
Which is really dangerous.
It's heartbreaking to think about how many people's lives were turned upside down because of this. But the victims didn't just, sit back and accept their fate. The article talks about how they actually banded together and formed this organization called the Stichten Onderzoekskollektiv Hengelo, or the Hengelo Research Collective Foundation, to actually fight for justice. So I'm curious, what surprised you most about their response to this?
I think it's their tenacity.
Yeah.
They could have easily just resigned themselves to the loss, but instead they chose to take action.
Right.
They hired a lawyer, they pooled their resources, they gathered evidence, and that ultimately led to the trader's arrest after he was in hiding for a year.
Wow.
So it's a really powerful example of what collective action can achieve.
Yeah, it's really inspiring to see that even after going through, such betrayal and financial devastation, that they found the strength to unite and to seek accountability. That must have been a long and really difficult process. The article mentions that the police even searched the trader's parents' house where he was living before he disappeared, which adds another layer of complexity to this whole thing. I mean, can you imagine the emotions involved for everyone involved?
Oh, absolutely.
Yeah.
It's never a clear-cut situation.
Okay.
There's the human element that we can't ignore.
Of course.
You have the victims who are desperate for answers for justice, and maybe even just a sliver of hope that they might be able to recover some of their money.
Oh.
And on the other hand, you have the alleged perpetrator, this young man whose actions have had these devastating consequences, not only for the victims, but potentially for his own family as well.
Yeah, it's a stark reminder that these financial crimes, they really have ripple effects that extend far beyond just the money lost. The emotional toll, the shattered trust, the impact on families and communities, those are wounds that can take a very long time to heal. So I'm going to kind of shift gears a bit here. For our listeners who might be thinking, okay, this is terrifying, should I just avoid crypto altogether? What advice would you give them? How can people protect themselves in this, what sometimes feels like the Wild West of digital currency?
Yeah, I mean, cryptocurrency, like any investment, comes with risks, but it also presents really exciting opportunities.
Right.
I think the key is to approach it with, a healthy dose of caution and a commitment to educating yourself.
Yeah.
Don't let fear paralyze you.
Yeah.
But also don't let the allure of quick riches cloud your judgment.
Right.
If it sounds too good to be true, it probably is.
That's a good rule of thumb for pretty much any investment. So where does someone even begin with crypto education? It can feel really overwhelming, especially for newcomers. What are some of the essential first steps?
Well, I think you got to start by understanding the basics.
Yeah.
What is Bitcoin? What is Ethereum? How do these cryptocurrencies actually work? There's so many resources out there, reputable online resources, articles, videos that can provide that foundational understanding. I think the goal is to move beyond the hype and to develop a clear understanding of the underlying technology and, both the potential risks and rewards.
So knowledge is power.
Wow.
Arm yourself with information before you jump into anything.
Yeah.
What else should people keep in mind when navigating this crypto landscape?
Due diligence is essential.
Yeah.
Thoroughly research any individual or platform offering you investment opportunities. Don't just rely on, testimonials or flashy marketing materials.
Right.
Look for independent reviews, verify their credentials, check their track record. And it's okay to ask questions. If something feels off, trust your gut instinct.
That makes sense. It's about being proactive, not being afraid to dig a little deeper. Don't get swayed by the pressure tactics or promises of guaranteed returns. Those are huge red flags. Would you say it's also essential to diversify your investments?
Absolutely.
Yeah.
Diversification is a fundamental principle of investing. Don't put all your eggs in one basket. Spread your investments across different asset classes, including different types of cryptocurrencies. That helps mitigate risk and it protects your portfolio from the volatility.
Which is pretty common in the crypto market.
Yeah, exactly.
So diversify, do your research, and I think maybe most importantly, don't be afraid to seek advice from qualified financial advisors. They can provide personalized guidance and help you navigate this really complex world of crypto in a way that aligns with your financial goals and your risk tolerance.
Couldn't agree more. A good financial advisor can be an invaluable resource. They can offer you objective insights, help you develop a sound investment strategy, and most importantly, steer you away from those potential pitfalls. It's like having a knowledgeable guide in a sometimes very uncharted territory.
Yeah. Speaking of guides, this Hengelo case, while it happened in the Netherlands, I think it holds valuable lessons for all of us. What do you think are the broader implications of this scam for the global crypto community? What should we be learning from this?
Well, I think it really highlights the need for better regulation and oversight in the crypto market. We need stronger safeguards to protect investors and to deter these kinds of fraudulent activities.
Right.
That includes clear guidelines for crypto exchanges, robust know your customer protocols, and mechanisms for actually tracking and tracing transactions to combat money laundering and other illicit activities.
So it's about finding that balance, right? Fostering innovation, but also putting the right protections in place to ensure, market integrity and investor confidence, which seems like a pretty complex challenge for regulators around the world. But beyond regulation, what can the crypto community itself do to prevent these kinds of scams from happening again? What role does individual responsibility play in all of this?
That's a great point. Like, regulation is essential, but it can't be the only solution. The crypto community itself needs to foster a culture of due diligence and critical thinking. We need to challenge that get-rich-quick mentality that we see so often in this space. Responsible investing takes patience, research, and a willingness to ask tough questions.
It's about shifting the mindset from speculation to actual understanding, right? Instead of blindly chasing returns, we should be encouraging people to really dig deeper, understand the technology, the potential, and yes, the risks involved. It's also about, having a healthy amount of skepticism, especially when you encounter extravagant promises or pressure tactics.
Exactly. Don't let fear or greed dictate your decisions. Take the time to educate yourself. Engage in thoughtful discussions with others in the community. And remember, there's strength in collective action. By working together, sharing information, and holding each other accountable, we can make this space safer and more resilient for everyone.
Yeah, this Hengelo case, I think, is a really powerful reminder that behind every cryptocurrency transaction, there are real people with real lives and real dreams. And while the idea of quick riches can be incredibly tempting, it's crucial to remember that, sustainable wealth creation is built on a foundation of knowledge, careful planning, and ethical decision making.
Absolutely. And as we wrap up this deep dive, we want to leave you with this thought.
Yeah.
The future of cryptocurrency really hinges on our collective ability to learn from these past mistakes, to champion responsible investing, and to advocate for a more transparent and equitable financial ecosystem.
So as you continue to explore the world of crypto, remember to invest wisely, stay informed, and always keep in mind the human impact of your financial decisions.
Thanks for joining us.
Thanks everyone for listening, and we'll see you in the next deep dive.